Wall Street ended flat last night. The Nasdaq closed at 26,683.94, the S&P 500 at 7,554.29, and the Dow at 51,671.03. All three major indices had 0% change. But pre-market futures edged slightly higher. Nasdaq futures were up 0.02%, S&P futures gained 0.08%, and Dow futures rose 0.25%. That suggests a steady overnight sentiment. On individual stocks, there were no verified moves exceeding 8% in either direction. Now let us look at the global macro picture. The 10-year U.S. Treasury yield fell to 4.44%, down 0.63% for the day. This continuous decline signals easing liquidity conditions, which supports risk asset valuations. The VIX Fear Index stood at 16.09, down 0.68%. It remains in the lower end of the normal 15 to 25 range, indicating low market fear. Overall risk appetite is neutral to slightly positive. The US dollar index broke below the key 100 level, settling at 99.61, down 0.14%. This is favorable for capital flows into emerging markets and positive for foreign fund inflows into A shares. WTI crude oil dropped sharply to $76.49 per barrel, a decline of 4.83%. This reflects demand concerns or expectations of increased OPEC production, but it also eases inflation pressure, indirectly giving more room for monetary policy. Gold rose to $4,369.20 per ounce, up 0.61%. In the context of a weaker dollar and a sharp drop in oil, gold posted a modest gain, reflecting both safe haven and inflation hedge qualities. Putting it all together, the global market is in a risk-on mode. That means falling treasury yields, a weak dollar, low VIX, and modest gold gains. But if the VIX rises above 20 or the 10-year yield bounces back above 4.5%, this window could close. On the currency front, the onshore and offshore yuan both traded around 6.75, continuing to strengthen. The yuan has been moving up from the 6.77 level recently, reflecting dollar weakness and China's economic stabilization. Depreciation pressure is further easing. This opens the door for foreign capital inflows into A shares. On trade and technology restrictions between China and the U.S., there are no new verified major events. Tariffs and controls remain unchanged, posing no additional shock. For today's A share market open, we expect a flat to slightly positive start. Overseas futures are a bit higher, the dollar is weak, and the yuan is strengthening. These are all favorable factors. But the SSE 50 index fell yesterday, showing divergence among heavyweight sectors. If the offshore yuan weakens past 6.77 or U.S. stock futures drop more than 0.5% at the open, this forecast would be invalid. Looking at today's specific market, the Shanghai Composite Index is likely to trade in a range with a slight upward bias. The core trading range is 4,080 to 4,120 points. The Chi-Next board is expected to maintain its strength and continue to lead. The Shenzhen Component Index rose 0.93% and the Chi-Next gained 1.72%, showing that funds favor growth stocks. Falling treasury yields support valuations, but the Shanghai Composite is held back by the SSE 50. If the Shanghai Composite opens below 4,080 or northbound capital sees net outflows exceeding 2 billion yuan in the first half hour, we should switch to a wait-and-see mode. For sectors, the most active areas today are likely to be technology broadly defined, including AI hardware, optical modules, and semiconductors, as well as defense and quantum computing. Our screening radar shows high scores for optical components, compound semiconductors, and quantum computing stocks. Funds are likely to spread into these tech subsectors. AI data center-related storage names are also worth watching. On the risk side, watch out for the SSE 50, banks, and real estate heavyweights. The SSE 50 fell 0.84% yesterday, the weakest performer. With limited incremental capital, heavyweight stocks may continue to drag the index. Also, the sharp drop in crude oil pressures the energy sector, so oil and petrochemical stocks should be avoided. Northbound capital today has a high probability of net inflow. The yuan is strengthening, the dollar is weak, and the VIX is low. These three factors combine favorably. Watch the buying intensity in the first 30 minutes. If net inflow exceeds 1.5 billion yuan, that would confirm the trend. Here is the bottom line. Falling treasury yields plus a weak dollar plus a low VIX means the risk on window remains open. A shared technology and growth style is likely to dominate in the near term. Today's probability assessment is 40% for an up day, 45% for a sideways day, and 15% for a down day.